It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Wednesday evening, March 9th, 2016. Another exciting newsletter in store for you guys and gals tonight. We're covering crude, S&P, gold, and of course the mighty euro. Starting out tonight, we got crude oil bullish with a spike in channel, which tells us the buyers to stay patient for a correction before they buy more tomorrow. And the sellers have a chance at a short-term scalp off the highs, but they got to wait for the correct signal. Boy, that oil market, 5% down, 5% up, 5% down. Boy, oh boy, it's been a trader's market this year so far. Moving on, though, with the S&P. The S&P is range-bound with a bullish bias, and a recent trap low is likely to send this price back to range highs tomorrow, where those buyers will try to hold the pullback and keep that trend going back to that big round number of 2,000. Got a completely range-bound market right now on the S&P, but the bulls have the edge. We'll see if they can keep it tomorrow. Gold is bearish this evening, and a bull trap this evening tells us price is likely going to retest today's lows. We've got a possible measured move lower for tomorrow. The buyers have a small window. They have a chance to hold off the sellers, but they have to act quickly on the yellow metal. We'll take a look at that in a moment. And of course, the euro, the ugly chart of the day, right? It's range bound, low volume, and sloppy ahead of tomorrow's ECB announcement. Big announcement tomorrow morning for the euro traders out there. We get a bullish spike in channel about to fail on the euro. We expect price to collapse back to the range lows tomorrow. You know, it's kind of a coin toss right now before we hear from Super Mario tomorrow morning about 7:45. We'll talk about that in just a moment as well. As you guys can see, we got a great plan for crude, S&P, gold, and euro. Before we jump into our charts here tonight, though, I do want to remind you, the only place to watch the full-length newsletter video is on our trading blog. If you're watching this video right now on our YouTube channel, it is just a small portion of the full-length video. If you want to watch the whole length, make sure you follow the link in the description of the YouTube video and join me over here at Sideways Markets. While you're here enjoying the full-length version, don't forget to grab a free pass to come out and test drive our live trade room. Come join me in the trade room as a guest for a few days this week or next, whenever you're free. And of course, lower left-hand corner, you can register as a member of our nightly newsletter mailing list. You'll never have to worry about missing another newsletter ever again. I'll send you an email every evening at 8 p.m. Eastern Time when the nightly newsletter is ready to be watched. Right below the video tonight, you can download all the charts that you see me using in tonight's video. Just follow that link that says click here to download today's charts. And then over on the right-hand side, I will encourage you to learn more about the different strategies that we use here at School of Trade by registering as a trial member. Not the same thing as your free pass. The free pass will give you a pass into our trade room. The trial membership, though, on the right-hand side, that will teach you more about how we trade here at School of Trade. You can learn more about what it means to be a student. And don't forget, guys, we've been helping traders for over 12 years here at School of Trade and Sideways Markets. We always have someone standing by 24/7, 365 to answer all your questions, so use the support button on the right-hand side. Getting started here this evening, we have finally got some news here tomorrow. Look in the news calendar for tomorrow. Tomorrow is Thursday, March 10th. Now, tomorrow, another real, I shouldn't say finally, right? Boy, it looks very impressive, but there's only one news event here in the U.S. session. Tomorrow morning, though, you will have the ECB announcement at 7:45 a.m., right? There's the ECB announcement tomorrow morning. Boy, there's a lot of talk about Draghi tomorrow. He needs to kind of show up and dance tomorrow, doesn't he? Expecting to get another load of quantitative easing at the ECB. We'll see tomorrow morning at 7:45 a.m. That's causing gold, that's causing the euro to be relatively consolidated right now. So just a heads up, tomorrow morning, it's not on this schedule. This will be for the U.S. session, which starts about 8 o'clock Eastern time. But just before the U.S. session starts, 7:45 a.m. is the ECB announcement. And then usually that will result in a press conference that lasts until about 8:30, 8:45 a.m. So, you know, the announcement will come out at 7:45. Draghi will hit the microphone. He'll get beat up for an hour, right? Maybe a little bit longer. So you're going to see a little bit of chop and slop there after 7:45 to 8:45, and hopefully we'll find some direction tomorrow. The one thing we know tomorrow, though, is when that number comes out, when that announcement comes out, it's just like any other big news event. Remember, volatility increases, but liquidity decreases. So it's a very dangerous environment to be trading the euro tomorrow. Really, anytime between now and about 8:30, 8:45 tomorrow morning. So be careful on the euro. Gold will also be a market that'll be highly susceptible to whippiness. Again, very high volatility, but low liquidity. Right? What that means is that you're not going to get good fills. It'll be difficult to find a buyer to take your sell and vice versa. So be careful tomorrow. If you need some hand holding on that, don't forget we open up our trade room tomorrow morning at 8 a.m. and we'll walk you through all of that. For all the U.S. session traders, we have just one major news event tomorrow morning at 8:30, and then we have the Treasury budget at 2 p.m. right tomorrow afternoon. So we'll get to it early at 8:30 with jobless claims. Jobless claims is kind of a yawner. It's not really, you're not going to see much big movement off jobless claims. The JOLTS report is the one that everybody's watching these days. Of course, it's my gal Janet Yellen's favorite report, right? The JOLTS report, we'll get that next week, next Tuesday at 10 a.m., something like that. So be on the lookout tomorrow morning. We got news at 8:30 a.m., the Treasury budget at 2 o'clock. We do the vast majority of our trading in the morning session from 8 o'clock until 11:30. That overlap between London and the U.S. session. So we will not likely be affected much by that 2 o'clock announcement, the Treasury budget announcement tomorrow. But the jobless claims report, though, is sitting on hands 5 minutes before and 5 minutes after. You've got your schedule for tomorrow. A week this week where we haven't had, this is only the second news event we've had this week, right? So it's been all based on news headlines, third-party announcements, stuff like that. And, of course, there's been a bunch of political events, primaries and caucuses around the country right now. Gotta love the Democratic cycle, right? Hope you guys and gals are ready for that schedule for tomorrow, right? Be ready. Let's jump into our charts here for tomorrow. Starting off here this evening with the oil market. Crude oil is bullish with a spike in channel. This tells the buyers to stay patient for a correction before they buy, and the sellers have a chance at a short-term scalp off the highs with the correct signal. Boy, oh boy, those sellers could not keep it together and right back up to that previous high of day. That was our target, right? Boy, what a great session we've had. This has been a trader's market this month. 5% down, 5% up on Monday, 5% down on Tuesday, and then whoop, right back up. We talked about this last night. We shouldn't be surprised at this move back higher here. If you missed last night's newsletter, right, go back and watch it. We have a spike in channel, 3 legs higher, and multiple levels of resistance on the chart this evening. The spike in channel tells the buyers to wait for a correction back to the base of a channel, as well as a failure target back to the lows from today. Now, we talk about spike in channels quite often. We get a couple of them on the charts here tonight, right? There's your spike in channel. Right, spike up, channel out. And a spike in channel is a really fun pattern if you know what you're doing to trade it. Most important thing is a spike in channel is clearly a strength pattern. If you look closely at this chart, you'll notice we didn't break a swing low the entire session today, right? So the vast majority of the buyers are still hanging out in this move. What's likely to have happened, though, is by the time we got back to that previous high of day, like I said in last night's newsletter, that was the target for today. The previous high of day was the target for the buyers, and they got their target. So as of right now, we're expecting to see some profit taking, and we're expecting to see a correction, right? That correction is going to want to go back into this correction zone, right? A major area of support. Ultimately, the buyers are going to be looking for any of these areas that you see marked up here, right? Any of these areas to hold as support. Okay, so in a spike in channel, we look for a decent size correction. I've got this correction zone marked up from 37.33 to 36.93. In all reality, it may not pull back that far. It may only go back to that 37.55 area. But 55 is definitely where we're going to be looking, right, for the first round of buyers to enter into this market. It's not too difficult to kind of think about this. Buyers will be looking to buy at 55, buy a little more at 39, buy a little more at 33, right? Buy once more at 37 even, 30.73. But boy, once we get below this area, though, it's going to be difficult for those buyers to recover, and we then expect a failure target to be reached down at 36.13, right? It's almost identical, just the polar opposite of what we talked about in last night's newsletter, right? We talked about this area from last night's newsletter being the battle zone, and if they couldn't get the job done there, it was going to shoot back to, right, the high there. And so that's, again, go back and watch last night's newsletter. This is the same thing now. It's just the opposite direction, right? Bull spiking channel, looking for a correction lower, right, and then shoot higher. And again, we don't know which level of these is going to hold. So what we're looking for is for one of them to hold, and then we'll have plenty of opportunity here, right, going back to the upside. 3 legs higher. 1, 2, and 3. 3 symmetrical legs higher. The first leg are the market makers. The second leg is the trend followers. The third leg are all the leftovers, right? All the sloppy seconds, right? This is overbought. This market is now priced in very, very expensive, right? So the sellers will be looking for buyer failures to sell off these highs, and the smart buyers will be waiting for a minimum of 2-leg correction back to support. So when we see 3 legs up, we're looking for 2 legs back down to an area of support. Seems to fit perfectly right along with the spike in channel, right? So spike in channel tells us to look for a correction. The 3 legs up tell us to look for a 2-legged correction. Now, another final clue here, the previous high of day, right? That previous high of day, which we talked about in last night's newsletter, that was the target, right? That was an easy target for the buyers to take profit today. That means pending any shenanigans overnight, OPEC has been pretty active over the past few weeks. We don't expect to see anything more than a pullback here before we go higher. So looking at this chart right now, let's play buyers and sellers. First of all, if you're a buyer right now, your best bet right now is waiting for a pullback into any of these support levels below, and then you're looking for seller failure, right? Seller failure into pullbacks going back to the high. Once we get that pullback, the initial target is back up to retest this high. Okay, that's the initial target. The runaway target will be a major gap fill up at 39.27. The bottom line is, if we get that 2-legged correction, then we start going higher, look for a measured move higher, right? Look for a measured move higher. Okay, you can also look a little bit larger for that measured move. That will also be a measured move target for the buyers, right? That's really the best option for the bulls. The other option is going to be if we can break higher. Again, it's super aggressive, right? But if we break higher here, we'll have to start seeing this area hold as support, right? It's going to be difficult because we're 3 legs up. Really, the only way I want to be a buyer right now is if it goes lower, right, down to support, seller failure, buy it back up, or if it goes higher, I'm right at the high, I'm 3 legs up, I want to see a bear trap, right, to buy. I got to be really careful if it goes higher being a buyer right now because it's so expensive up here. So if it does push higher, wait for the sellers to try to sell on a pullback, right, and try to get in a little short-term bear trap there going. Just don't buy the high, right? That's the one thing. Now, if you're a seller right now, you ultimately have the easier job right now. I say the word easier because this is nothing but a bullish market right now. So being a seller, you better wear your helmet and wait for the proper signal. First of all, the first opportunity if price goes higher is going to be looking for a strong signal candle with a double top up here, right? Preferably, it would be a double overshoot, right, of that channel high to sell it. Again, you're selling right into that freight train, right? So it's aggressive. Float a bigger stop, and then your target is going to be back down here, right? So if it goes higher here, you're looking for a double top, strong red candle, right? Stop's going to have to go considerably higher because it will be easy for price to poke right back up and then head lower, right? So if you sell it as it goes higher, you're going to have to float a big stop and then put that target down at the next level of support. The risk reward will be there. It'll work, but you better have a big, you better be okay with having some pain, right? Because as it goes higher, you're going to be selling into that higher high. Again, look for a double top that makes a higher high in price, float a relatively big stop, 30, 40, 50 tick stop. It's what's going to take. But again, your target will be $1 lower, right? And that's why I say it'll be worth it, but with a bullish market, it's going to be aggressive. The best option if you're a seller right now on the oil is going to be to look for price to get below this channel low, right? Get below that channel.